Okay, everyone, let's talk about property and liability insurance. In this class, I will just talk about the basics and homeowner insurance. We will spend another lecture talk about car insurance and personal umbrella insurance. So the requirements come mainly from CFP. CFP does require a little bit of the understanding, but it will never go into so many details. And they worry only about investment, so I just focus on CFP starting from this lecture. So let's just read over it. Identify the primary components of property and casualty insurance and how each component fits into a. This is important, okay? You just need to have a larger picture after you finish all the CFP curriculums. Differentiate between the basic homeowner insurance policy and how to evaluate and compare policies. So you will have multiple policies to compare, and then you need to know which policy to use and when. Automobile insurance, excess property damage or liability exposure. A lot of times, liability exposure is the main focus. The role of personal liability insurance, and we will talk about umbrella, right? So homeowner, auto insurance, and umbrella. That's the focus today. Let's talk about homeowner. Okay. Perils. Okay. So we have a basic coverage. We will cover those type of perils. We have 12 here, right? And then we have another 6 here. Those are broad, right? 12 plus 6 equals to 18. So 18 of them will be covered if it's defined as broad. If you go back to the previous one, those are pretty straightforward, right? Propulsion, aircraft, volcano. So all those will be covered. Okay, in case you're wondering about the pair. Okay, I was in Texas. They all had damages. In the broad, we're including falling objects. Okay, I think it covers trees. You need to so don't take what I'm saying as correct or accurate. The best way to understand the policy is go read the policy itself. Okay, and then you have all those, right? Damage from electric current. I'm not gonna talk about or test on those details. And you will see I will skip a lot of slides because just a lot of rules, and it has to be here for you to prepare for the professional exams. They have a lot common. Most policies will be open perils. Okay, so what does that mean? It will just cover everything unless they exclude it. Okay, so they will talk about exclusions mainly due to neglections. Termite, right? They will exclude it. Flood, war, earthquake. General exclusions for all homeowner policies include those. Okay, movement of ground, right? Damage from water. You see, including underground and the sewer, together with flood, war, nuclear, power failure, intention act, neglect. Okay. Flood insurance. This is a different policy. Okay. If you are interested, you can just Google it or spend more time talking about it. You need to know that flood is excluded from a lot of homeowner insurance. And then it has several coverages, right? It goes by sections. Okay, section 1 and 2. Then we have those 4 type of coverages in section 1 and 2 more. Section 2. Dwelling. Okay, so what is dwelling? So cover, repair, or replacement of the house. So this is what do you think homeowner insurance does, right? This is important. It will be tested, and I will also test it. You need to insure at least 80% of the replacement cost of the building. Otherwise, you will have some you will pay more than what you plan to. Okay, or they will pay you less. You need to know that a lot of co-insurance, mainly property, personal property, are based on actual cash value. Okay, you need to know that for the house itself, it will be replacement cost, replacement value, and then for a lot of personal properties, it will be actual cash value. Okay. Again, you need to insure at least 80% of replacement cost of the house. So there's a formula here. In order to understand it, let's look at one example, right? So this person owns a home and the value is $500,000, replacement cost is 400, and then the value of the land is this. He purchased 250,000 of insurance with 80% co-insurance requirement. The tornado costs 100 grand damage. If it has a 500 deductible, how much will the insurance company pay? So just apply this formula, right? This is the policy amount, and then this is the replacement cost of the house. Don't include land. Land will be excluded. 80%. A lot of times it's just 80%. So you need to make sure this ratio greater than or equal to 1.0 to have your coverage. And then right here it's less than it, okay? Right here, like we can see that 80%, that would be 320, right? 250 is less than 320, which means this person is underinsured. Okay, and then the insurance company will only cover, this amount, okay? Remember, this is a loss, they only pay you 78. So that's not good, and also you have deductible, right? Deductible will be subtracted from that. So they will only pay 77 from the insurance company. However, if you insure more, right? If you insure 320, which is equal to that, then you are going to get covered 100%. Is that making sense? You need to make sure that you have to insure at least 80% of the replacement cost. Is that what your goal is? Is that what you are shooting for? No. Okay, you will never just make sure your clients meet 80%. You will make sure they have more than 80%, because the replacement cost of this is going to change, a lot of time increase every year. Okay, if you give a client this year like 320, next year he will be underinsured or she will be underinsured. That's not good. Okay, so a lot of times we'll just start with 400. That's fairly simple. You will just stay with 400 and then do inflation adjustment afterwards. The premium will be very similar. Okay, trust me. Just trust me on that one. Other cover, or you can just call an insurance agent and find out. Other structure includes detached garage, storage buildings. A lot of times we have coverage A, which is a dwelling, right? And then it's just 10% of it. They don't give you more than that. It's just standardized policy, okay? Remember, if you have any business purpose use, it will not be covered. If you have a business office in your house, it will also be covered. This is personal, okay? If you have business use, then you go get a business insurance. That's what's going on here. Okay? And then let's talk about personal property. Okay, those are the personal property within your house, right? They have some limitations. Okay, some jewelry, some coin collections, or cash, right? Because they cannot cover those. If you have like $1 million of jewelry at home, they're not going to insure $1 million for you. They will just to give you another thing, right? Another or endorsement or schedule. If you have unique needs, right, then you just talk to them or get a writer, right? Those will be excluded, so you guys can just read over them. And then they offer loss of use. What is loss of use? So when your home is has a fire, right, and then you need to ask them, you cannot live over there. So basically that's what loss of use. You cannot live in your house. What can you do? You need to find a hotel. It costs you money. Insurance company will reimburse you reasonable amount. Personal liability. This is where a lot of people don't really know. You need to be aware that your homeowner insurance provides liability coverage. Okay. Bodily injury and property damage. Okay, so let's say you damage other people's window. Okay, or someone in your house, you have a party, they injure themselves and then they sue you. Those will be your liability, and then homeowner insurance will come and you will. So basically, you have some coverage. Okay, you don't have to pay them cash. we only pay the less of the damage of the coverage. They do exclude professional liability exposure. Medical payment to others, right? If you have someone injure themselves and then they go to hospital, those will be covered by your homeowner insurance. However, if you injure yourself at home, your homeowner insurance is not going to pay for you because you have health insurance. Okay. I remember, like, if you have a dog and you bite someone, your liability will also cover to some extent. Again, go read the policy. Okay. So those are the rules, right? So you just need to read over the rules. Coverage F will not provide. So those are your family members, right? If you injure yourself at your home, your homeowner insurance is not going to provide coverage because you have your own health insurance. And they have some other rules. It's a lot of rules, a lot of laws. That's one part of financial planning. That's why I think it adds value and it goes above and beyond compared with CFA. General provisions of Section 1 and 2. Okay, you can just read over them. This is important. Okay, so where it will be tested. They have multiple type of coverage, and this is from my education CFP preparation quick book. Okay, quick sheet. So open is actually really good. A lot of homeowner insurance we have is HO3, okay, because it has open coverage, okay, open perils. And then you just need to pay attention to the exclusions. That will be good enough. So HO4, I heard this is rental, right? Sometimes if you rent an apartment, they will ask you to get a rental insurance. This is HO4. And then some others would be for older houses. I think HO8 is for older houses. The land is more expensive than the house. Okay. You need to also understand that those are just summaries. Okay. And they have exclusions for watercraft, and they have horsepower here. This is HO2, right? Covers basic and broad named perils. Okay, we have 18 of them. HO3 provides coverage in dwelling. It's open perils, which is really good. Personal property is named peril basis. A lot of loss of use. 50% insured on the dwelling. Contain exclusions. Okay, read over those exclusions. And HO4 is designed for renters, right? If you rent a house, this is what's designed for you, and provides protection for furniture, clothes, and personal property. Okay. Loss of use is 20% of the amount of coverage C, 10% of the amount of personal property coverage. HO5 is dwelling and personal property coverage on open peril basis. HO6 covers basic and broad name perils. You can just design it for those renters, okay, owners. Okay, you can just read over it. I'm not gonna read over it. Will those be tested? Not necessarily in CFP exam. They will just ask you which one is good for them, and they will ask you about certain rules. You will expect something from me in this class. The best solution for you to study would be just read over the slides, read the book. Do you need to remember all of them? You need to remember the important things. Okay. And we have HO8, right? Let me see. Current material, relative to place older material, and the craftsmanship. Read over it, okay? I don't really understand some of those either. And then homeowner insurance duties after the law. What do you need to do? Okay. Also, you need to read over those. Laws to when you need to do. Okay. So this is a really good table. Very important. This is where this is what I'm talking about. Okay, the important stuff. Okay. So those will be when I write an exam, I will probably just look at this form and then try to do some questions on the comparison. Okay. And we have inland and marine insurance. That's a different type. Okay, which is usually included on the homeowner insurance policy as a schedule endorsement or like sometimes they call it floaters or schedule. So those things can be added, okay? Or you can just call your insurance agent to find out. A lot of times CFP, some of them, some financial advisor will work with insurance agent, or you have someone in-house, right? We have specifically they have insurance on watercraft, okay? So I will just stop here. Let me know if you have any questions.